good set of numbers posted by Hindalco in the third quarter, and once again it were the two key components, the aluminium business in India as well as Novelis and Aleris, that have really led the move in Hindalco's third quarter. But it was not just that, it was also the deleveraging that continued in Hindalco, which sort of also gave a boost to the overall profile of the numbers. Copper business, however, was again subdued because of the planned maintenance shutdowns. We also did have TCRC's margins that did not do so well. So revenue for the India business was at 11,425 crores, up 11%, better than expectations. The EBITDA was up 17% at 1,528 crore rupees, leading to a margin expansion to 13.4% versus 12.7%. The profit after tax was higher at 495 crore rupees. Definitely a big move seen over there. The aluminium EBITDA, like I said, star performer, 27% higher on the back of several factors. One of them being the fact that we have seen improvement in the pricing of aluminium, so that is something that has aided the EBITDA. Input costs as well have been lower. The VAP sales were at 80,000 tons. There is thrust on operational efficiency supported by lower input costs. That's helping them keep the COP lower. We'll also be watching out for the Utkal expansion, which will be commissioned in the next quarter, Q1 of FY22. For copper though, the production itself of cathode was low due to planned maintenance shutdown in one of the smelters. CC rod sales, however, grew. Fertilizer sale volumes grew, but then the contribution from there is relatively a little lower. Consolidated, of course, excellent operational performance aided by Novelis and Aleris. These were really the star performers. Highest, a record adjusted EBITDA of $500 million. The Novelis EBITDA per ton was at 510. This is even beyond the management stated guidance, which is definitely, quite encouraging. The net income as well was at $195 million, up 82%. Remember that they also do have the US and Chinese plants, the automotive plants that will be commissioned, so that as well will add to the margin profile of Novelis, and it will perhaps keep it in the upper end of the EBITDA guidance given for Novelis, which is at $475 to $500 per ton. This time around, of course, remember, it was at $510 per ton. And I think another important factor was the deleveraging, because compared to the previous quarter, they managed to cut down debt on a net basis by around 5,000 crore rupees. So the net debt to EBITDA ratio, which by the way at its peak in June 2020 was at 3.83x, has now come down to 3.09x. So all of this cash accretion that Novelis and Aleris' businesses are generating is being deployed in culling down debt, and that's another positive sign for Hindalco.